What is going on, my fellow wealth creators? Matty Ice here. Welcome to another training. Really excited to do this video because I am officially a private money lender, guys. I have just closed on my very first private money deal. I'm so excited. It's really, really cool. And I got to tell you, I have to pinch myself every once in a while too, because it's been such a long journey, crazy journey. And it's just a little surreal that I am lending on a real estate deal right now. So it's kind of crazy. But I wanted to, my channel is all about just sharing my journey, guys. None of this is investment advice. I'm not telling you to be a private money lender. I'm just sharing how I'm building wealth and what I'm doing to achieve my financial goals, et cetera, et cetera. And, take what you want from it. But I really resonated with private money lending because while I want to invest in real estate, I think real estate is just, it's probably the best way to build wealth aside from maybe starting a business. But real estate is a fantastic way to build wealth. And what I love about it is there's so many different ways you can invest in it. You don't have to just buy a rental property or just do fix and flips. Like there's so many different things that you can do. You can wholesale property, you can do the fix and flips, you can do the rental properties, multifamily, commercial, you can do lease options, wholesaling lease options. That's actually how I got my start in real estate a while back. That's an interesting story. But anyways, there's also private money lending. And it's a very passive way to invest in real estate. And you still get really good returns. You're not going to make as much necessarily as the investor, the borrower in this case, as you'll see by the numbers that I'm going to show you. But it's still like, I might not make as much, but I don't really have to do anything. I'm not messing with any of the renovations. I'm not messing with negotiations. I don't have to market the property and sell it afterwards and, maybe manage tenants, whatever the strategy is that the investor is implementing. I don't have to do any of that. Right. So it comes down to, how much time you're putting into it versus the reward that you get as well. So obviously, if I'm not doing any of those things, which there's nothing wrong with that at all, it's just not in alignment with what I want to do. I want to focus on my business, creating content, etc. But obviously, I'm not going to make as much money there. But that doesn't mean I can't get really good returns and put my money to work. I'm literally being the bank here. And of course, I'm using I'm implementing the infinite banking concept. I am utilizing my dividend paying cash value whole life insurance policies. We're going to go through the numbers and you see why I'm getting really, really good rates of return by doing this, and why also something like private money lending, it's not nearly as risky as it sounds. Like, when I've told people that I'm doing my first private money deal, like some of them were like, "Are you sure you want to do that? You're going to give your money to a complete stranger halfway across the country," which is kind of what I did, but not really. There's some very specific characteristics of private money lending that make it very low risk. And also, I think, again, the education part of it, like I went through the course that I went through like 6 times. I actually hired them to mentor me through my first couple of deals. And I sent my deals to them, the one, or before I got the one that I invested in now. And I said, "Hey, can you guys take a look at this and let me know what you think? It looks good on the surface to me, but obviously I'm new here. I'm new to this, and I want to make sure that there's nothing in my blind spot here." And sure enough, the first couple of deals that I was looking at, not so great, at least for your first private money deal. And so there was a good process of education. And again, I think education is just the best mitigator of risk. When you know what you're doing, then whatever it is that you're doing becomes far less risky, right? So the education process was obviously really, really important, having a mentor and things like that. So those are some of the things that I want to cover and go through with you guys and break down the actual numbers of the deal. It's pretty sweet. So let's get into it. I got just a few slides here just to keep me on track. So my first private money deal, full breakdown, really, really excited. So again, the most important steps for me in this process was the education. So learning the process, learning the documents involved, learning about title, insurance, doing comparative analysis, getting comps and working with different team members, et cetera. And like I said, knowledge reduces risk, man. And it's really important that you educate yourself. So number 2, though, was networking. Guys, that's actually how I landed my very first deal. And actually, that's the next slide. But when it comes to networking, your network really equals your net worth. It is so important. especially in a business like real estate. So meeting mentors, that was probably the biggest thing for me, is getting mentors in the business so I could ask questions about different aspects of the business. Really, really important. Connecting with other lenders, joining real estate communities. I'm going to be joining my local real estate investment association, or real estate investor association, the RIA. All right. Just getting around other people doing real estate. And yeah, like right here, one introduction can change everything. So here's how I landed my first deal. And it really came down to the network. Is I joined a real estate community. I connected with a member, asked him a question on Facebook, and then he introduced me to one of his investors, which is the person, it's the investor that I did my first private money deal with. He's out in Louisiana. And this person has done tens and tens of millions of dollars in real estate. Really, really successful. Very humble guy too, because he really didn't need my money. He has access to plenty of money. But when we had our first conversation, he said, look, it's guys like you that gave me my start. So I absolutely want to work with you. And, he called me after the deal was closed too, which was awesome. Asked me if I wanted to do more deals because he has more deals in the pipeline. I'm just doing one at a time right now. But that one introduction, man, is what led me to doing my very first private money deal. And the fact that he was recommended by the member that I met in this real estate community, who had also invested over $1 million with him doing different deals very, very successfully. He made that introduction. We had a conversation, and boom, I'm in my first private money deal, right? So your network is so important. And the real estate community, it was an online community. Again, I'll link it down below. It is the Private Money Club from Chris Noggle. Fantastic community, guys. Like, if you're going to take real estate serious, it's just a great place to meet other investors and private money lenders. So if you're looking for private money, it's a great place to do it. So make sure you check that out. But that's how I landed my first deal, guys, was one introduction. I was just asking questions, connecting with people. And he sent me to his investor. We had a conversation, and boom, the deal is done. Like, you just never know when you're going to make that one introduction that can change everything, that can lead you to a very, very profitable, very successful deal. So here's the deal breakdown. And after this, we're going to talk about the return on investment. I'm going to go to my whiteboard and just break down the numbers. But here some details about the property. It's actually based out of Louisiana. I'm here in Jacksonville, Florida. Just kind of a crazy time we live in too. It's just the fact that I'm able to do a deal halfway across the country. Don't really need to see it. Obviously, they sent pictures, and I looked it up on Zillow, did my own due diligence, etc. That's a big part of it. But it's a single family, double wide. The purchase price was $110,000. And they ran comps. It's basically, they're pricing it to sell at $201,000. I dropped it a little bit to calculate my loan to value, just to put a little bit of wiggle room in there. But pretty solid purchase price. They're going to do really good. He also borrowed $25,000 of rehab costs. It's all cosmetic rehab. There's nothing major or structural that needs to be done. So he actually borrowed more for the rehab cost than he thinks he'll actually need, but he likes to borrow a little bit more just in case. So we don't have to go back and forth. He doesn't need to ask for more money later on just in case something comes up. So he borrows a little bit more just in case. All right. So that's the property. All right. Let's see. Loan details. So it's a total of $135,000 loan. We did a 6-month term, meaning if the deal is not done after the 6 months, I reserve the right. Obviously, the interest is going to continue to accrue, but I reserve the right to charge additional points for that, for the additional time. 3-month minimum, meaning if the deal is done in 2 months, I will receive 3 months of interest minimum. Okay, and that's typically what these deals around the time frame these deals take, 2 to 3 months, give or take. So I'm charging 12%. No points on this one. I wanted to just do my first deal, not to mention this guy doesn't need my money. I'll probably do points later on down the road, but I wanted to do my first deal. I feel pretty blessed that I'm able to do my very first deal with a very, very successful investor that has an awesome proven track record of success. Like, if you're getting into private money lending, I don't know that you could really get any better than that, working with a very experienced investor who's also experienced working with private money lenders. So 12%, no points, 70% loan to value. Like I said, I calculated it at as if they were to sell at $195,000. they know what they're doing, but I gave myself a little bit of cushion there. I don't really want to do over 70% loan to value. That just starts to increase your risk as the lender. Again, if you want to learn more about that, it's in the course that I took. Like I said, you get a discount if you go through my link in the description. It's very, very awesome. It's like a step-by-step blueprint for becoming a private money lender. So return on investment. Like I said, I borrowed from my policy at 5.5%. That's the policy loan rate right now. And, if you watch my other videos on my channel, I talk about the infinite banking concept a lot. I just think it's a really, really powerful financial strategy. And really, like this is a perfect scenario, perfect example of actually becoming the bank so I'm borrowing against my policy here at 5.5%. I'm earning 12%. It's 118% return on investment. We're going to break that down on the whiteboard here in a minute. All while my money is still compounding. Getting that uninterrupted compound growth usually nets 3 to 5% in my policies, in my whole life policies. So my money's still compounding in the policy. I get all the other benefits of the policy as well, but I'm able to use that money to make investments in real estate. The only cost to doing that is the little bit of simple interest that I pay for the policy loan. And as you'll see here in a second, based on the numbers, it is absolutely worth it to do that. So what I want to do is finish up on the return on investment. I want to break that down because this is exactly what banks do, guys. And like for me, this is just an incredible way to accelerate the wealth building process by doing what the banks do. All right, so let's head over to my whiteboard and we'll look at some numbers. What's up, my fellow wealth creators? Sorry for the interruption, but just really quick, I wanted to let you know about my other company, Reduce My FICA, where we help business owners with at least 10 full-time W-2 employees significantly reduce their annual payroll taxes. I'm talking about saving $300, upwards of $500 per year per W-2 employee that gets put back into your bottom line, back into your business. By reducing your annual payroll taxes. And use a supplemental health and wellness program. It doesn't interfere with any health or medical coverage that you provide your employees. It provides them with incredible benefits, not to mention it's at zero net cost to them. In fact, a lot of the times employees see a net increase in every single paycheck. So there's a lot of benefits to the employees, and it can put a lot of money back into your business. So if it's something that you'd like to learn about, I'll have a link down in the description. You can also go to the website, reducemyficanow.com. We have free training and free guides and things like that. You can learn how the program works, and then schedule a call if you think that would benefit your business. So anyways, I appreciate your time, appreciate your support. I hope it helps, and I hope you enjoy the rest of the video. Here we go. All right, let's have some fun with the numbers. So first thing that we're going to do is calculate the total amount of interest that I've earned. So the loan is $135,000. All right, we're lending it out at 12%. So on an annual basis, that's $16,200. Let's say this deal takes 3 months. That's usually about average for these types of deals. All right, so we're going to divide that by 12 and then multiply it by 3 because we're doing 3 months. So in 3 months, we're going to earn, so interest earned is $4,050. Okay. Now, because I'm implementing the infinite banking concept, there's going to be an interest cost, which I'm going to, again, we're going to break down the numbers. I'm going to give you a very simple example, a very simple real estate example, buying rental properties on why this makes sense. So stick with me here. All right. So let's first, let's calculate the policy loan expense. So I borrowed $135,000 from my policies. My current loan interest rate is 5.5%. So let's do 0.055. That's 5.5%. All right, annually, that's $74.25. We're going to divide that by 12 and then multiply by 3. All right, $1,856 interest paid. Now, you might be thinking, why on earth would I pay interest when I don't have to? Why not just loan the money, loan all of my money, and keep all the profit, not have the interest paid? Well, you'll see why in a minute. First, let's calculate the net profit here. So $4,050 minus $1,856 equals $2,194. So my net profit is $2,194. What is our return on investment? Well, it's not $2,194 divided by $135,000 because I did not use my own money. I'm leveraging the life insurance company, the life insurance company's money. My money is still getting the uninterrupted tax-free compound growth inside of my policy. I'm taking a policy loan, using my policy as collateral, 5.5%, and then I'm lending it out at 12%. Okay, guys, this is exactly what banks do every single day. Okay, they pay us 1% on savings, right? It might be a little bit higher right now, but historically speaking, savings accounts don't pay very well. Let's say it's 1%, and then they lend it out at 4 to 5%. And then they keep the spread. They keep that positive arbitrage. They make hundreds and hundreds and hundreds of percent rate of return every single year doing this. They pay us 1%, lend it out at 5. I'm borrowing at 5.5%. It would be the equivalent of the bank paying me 5.5% on a savings account and then giving a 12% mortgage. It's literally the exact same thing, what we're doing here. And now I get to keep that spread. And the only cost is the interest paid. Now, do you think the bank is complaining about the 1% they pay us in our savings account when they're lending it out at 4 or 5%, making 500 up to 1,300% rates of return every single year? No, they understand how money works. That's why they have the nicest buildings in every single city. It's because they know how money works. They know how to basically print money. It's a pretty brilliant business model. But check this out. So to get our return on investment, so we're going to take our profit here, divided by our cost to do this deal, 118%, guys. 118% ROI. I will take that all day long. That is pretty sweet. At this point, what I need to do, and this is why I talk a lot about on the channel and some of the podcasts I do on other channels. It's like we talk about being our own greatest asset, our ability to make money and generate revenue in our lives and take advantage of opportunities, etc. We are our greatest asset, right? So at this point, I need to figure out, how do I do more deals like this? And how do I add an extra zero at the end of it? How do I make the numbers bigger? That's on me. But the process is the same. 118% return on investment because, again, I leveraged the life insurance company's money. I didn't use my own money. My money is still growing in the policy. Safe, plus I get all the other benefits. Not to mention, another awesome benefit of these policies is that they get more efficient over time. Meaning, when I put, so for example, my premium payment on my first policy is $25,000 per year. I'm not on the hook for that, but I can pay up to $25,000 per year. In my second year in the policy, my policy is scheduled to grow by more than what I put into the policy. So I make a $25,000 premium payment, but my policy grows by $27,000. And then the following year it grows by $30,000 and so on and so forth. So imagine if you went to an ATM, made a deposit, let's say you put $100 in, but it spit back $110. How long would you stand in front of that ATM machine and do that all day long? And then let's say next year you come back, you put $100 in, now it spits out $120. And then the next year $130. Right? That's what's happening with these. When you custom design these policies, they get more and more efficient every single year. And you're basically getting access to more capital than what you put into the policy. Can you get that with a savings account? No. You put $25,000 into a savings account, you have access to $25,000. It's not the case with these whole life policies because they get more efficient, because we're getting that guaranteed growth and dividends, etc. Eventually, we put $25,000 in, but I have access to an additional $30,000. That's pretty sweet to me. All right. But what I want to do to wrap up here is give you a simple example utilizing rental properties. All right. Because like when people ask me, why on earth would I pay interest when I can just lend the money out? That's literally the same thing as saying, why would I get a bank loan to buy a rental property when I could just pay cash with it? Now, I suppose if you're a Dave Ramsey follower, then that makes sense to you. And I guess in some cases it does. But the power of leverage is incredible when utilized properly, obviously. But there's a reason that people use bank loans. They use leverage to build wealth in real estate because you're able to build wealth so much faster when you do this. So let's take an example here of a $100,000 rental property. All right. And we're going to go through two scenarios. One where we pay cash, and then the other where we do a bank loan. Okay. Now over here, let's say after expenses and everything, the property nets $1,000 per month. All right. That's $12,000 per year. Uh-oh, what happened? Did I lose I lost my pen here. 1 second. All right. Sorry about that. Had to do a quick refresh. All right. So let's, again, just to recap, $1,000 a month after expenses. That's $12,000 per year. That's going to give us a return on investment of 12%. Absolutely nothing wrong with this. Not saying this is bad. I'm just showing you the differences. And when you understand this process, you see how it can help accelerate the wealth building process when we utilize leverage correctly. All right. So in this scenario, 12% return on investment, nothing wrong with that. But let's do this scenario that is much more common in real estate. All right. And let's say in this scenario, we're not going to use our $100,000 in cash to buy the property. We're going to get a bank loan and we're going to put 20% down. So it's going to be $20,000. Again, I'm way oversimplifying this example, but I want to keep it simple for example's sake. All right. So we're going to put a $20,000 down payment over here. Okay. And let's say after expenses plus now the debt service, we net $300 per month. That's $3,600 per year. That gives us roughly an 18% return on investment. Now, if we just stop there, you can make an argument. I mean, it really depends, like for both, it depends on your financial goals. You get a higher return on investment over here, but you also make more money over here on an annual basis, right? Why do we do this? Because we still have $80,000 left of the $100,000. We can now go do this 4 more times and get 5 properties. And then when we run the numbers, all right, now all of a sudden, this really makes sense. So let's do, so $300 a month times 5, that's $1,500 per month. If we had 5 properties in this scenario, okay, times 12 months. Now all of a sudden we're making $18,000 per year. We have 5 properties and we're more diversified. There's actually less. Well, again, you can make an argument for both cases. There's more risk because you have debt, but there's less risk because, for example, if you're really relying on this income, let's say you're in retirement or whatnot, and what happens if you lose one of your tenants? Well, in this scenario over here, we still have 4 properties. If we lose one tenant, okay, one property is not rented out, we lose that $300 a month. We still have 4 properties that are cash flowing. We're still getting $1,200 per month. What happens over in this scenario when you lose your tenant? Now all of your cash flow is gone, right? So again, there's pros and cons to either scenario. That's why the infinite banking concept is not for everybody. That's why utilizing debt to build wealth in real estate is not for everybody. If you listen to the likes of Dave Ramsey, he says usually he says pay cash for properties, but you're not able to accelerate the wealth building process that way. Like you're going to typically build wealth a lot faster utilizing leverage, right? As you can see by the numbers here, right? And so what I just explained here is literally the same exact thing that we're very similar to what we're doing with the infinite banking concept. So when people ask me, especially in real estate, like, why would I pay interest to do this private money deal? Why would I incur that interest cost when I can make more money just lending it out? Okay, well, my question to you would be, why would you ever use a bank loan to purchase a rental property? Why not just pay cash? Like, why would you incur that debt service? Why would you incur that interest cost on your rental property when you could just pay cash? Right? But when you actually break down the numbers, it starts to make sense. So anyways, I'll go ahead and wrap up there, guys. I hope that helps. Like I said, this is definitely not for everybody. And that's totally fine. I'm just sharing my journey. This stuff really makes sense to me. I think it's a really powerful way to build wealth, with these policies. And when I say wealth too, like there's so many other benefits that we get, like there's so many external benefits, external rates of return that we get, like the peace of mind knowing that you have a really, really solid financial foundation in place. And you're partnered up with these really financially solid, mutually owned life insurance companies. You have access to the money when you need it in the form of an emergency or opportunity fund. If you do want to use it to build wealth, you can absolutely do that. But man, these things are just really powerful when you set them up properly and you use them properly in your life. So I'm a huge fan. But just sharing my journey. So let me know what you guys think. Drop some comments down below. Any questions? I'd love to hear your feedback. Either way, I'm really excited to be doing my first private money deal. If you guys want to learn more about that, I think it's a great way to build wealth, much more passively, obviously, within real estate. So I'll share all the resources that I have used that really helps me along my journey. I'll have some links in the description, some discount codes for you and all that stuff. So make sure you check it out. All right, guys, I'll go ahead and wrap up with that. Hope you are crushing it, and I will talk to you in the next one. To your success, Matty Ice is out.